Good afternoon and welcome to a huge number of people. We've got over 400 people registered for this event. I'm not really surprised because it is an important topic. Solicitors' accounts rules, November 2019 changes and what your accountant is expecting. As a management consultancy, we fairly regularly get instructions where lawyers get into trouble because they haven't kept themselves up to date with accounts rules changes. So I think this is particularly important for lawyers to understand where they stand and what they're supposed to be doing. So a huge welcome to Paula Wheatley, who is the presenter for this afternoon's webinar. I'm just going to say a few words of introduction. Before I do, I'd just like to remind everybody that it's our policy to use webinar mode rather than meetings mode. This means we can't hear you, we can't see you. If you want to make a comment, please use the chat button. If you'd like to ask a question, please use the Q&A. And Paula will do her best to answer questions as we go along. Now, because of the numbers, it may be that we don't have time to answer all questions and answers. So apologies if we're unable to do that. But if you want to send us queries after the event, I'll make sure that Paula does see that. Now, I want to just explain a little bit about Charnwood and Paula. I'm quite fussy in terms of expectations about accountants. I'm constantly disappointed about how some accountants can be quite reactive and don't have a very clear understanding of the SRA accounts rules. Quite frequently we come across potential clients or clients that are using accountants that have little or no experience with dealing with solicitors and the accounts rules. It is a specialism, and we always say to law firms, please only use an accountancy firm that are dealing with lots of solicitors firms. And I'm very pleased to say that Charnwood deal with dozens of solicitors firms. When I first moved back to Leicestershire, I used a very well-known accountancy firm that let me down, didn't submit my tax returns and had HMRC visit me. And then I moved to another firm in Leicester who were fine. They weren't particularly proactive, but they were okay. And then they got swallowed up by a larger firm. And that really was the time for me to look for a more proactive firm. And I became a client of Charnwood's in 2011. And I've had 10 years of absolutely brilliant service. They've certainly saved us a lot of money and provided us with fantastic advice at a very reasonable price. And I think I've introduced over 20 firms to Charnwood, and all of them have been very, very happy with the service. And my personal accountant in Charnwood is one of the partners, which is Paula Wheatley. So I'm very, very pleased to hand over to Paula. I will stay until the end and observe and be on hand if there's any technical difficulties, which touch wood there won't be. So Paula, thank you very much for agreeing to do this presentation, and over to you.
Well, thank you, David. I feel like I don't need to do my own introduction now. That was so lovely. So obviously, David's just mentioned who I am and what Charnwood are all about. I just want to start by thanking you all for joining me today for this webinar. As David said, a bit of background about us. We do have a large number of solicitor clients and we cover a vast range of legal sectors. So we've developed a really good understanding of the industry and the factors that affect solicitors' practices. As David said, I'm one of the partners and I head up the solicitors department. So over the years, my roles developed. I started off by doing the standard services of completing the audit, preparing the accounts, doing tax returns. And then as I got to know my clients more, I assisted cashiers and practice managers with their internal compliance. And now my role's developed past that, which involves me spending much more time with the partners of the firm, discussing the development of their business and succession planning, which is a massive factor in a lot of our conversations. So therefore, I've witnessed all of the areas across your practices and feel that I can add real value to the whole firm for the clients that I act for. So today I'll be focusing this session around what accountants expect from firms that they act for. So it incorporates some of the changes to the rules, but also some of the problems that we've come across since the rules have come in. And as David said, I will try and answer your questions as I'm going along. I've got the questions and answers section open, but if I miss any, I've saved a section at the end. So if you do want to save any questions for talking aloud, do let me know. So the new rules, they came into effect on the 25th of November 2019, and the aim was to simplify the rules and provide a better definition of client money. As you can probably see from them, the numbers have gone down to 52 rules to 13, and the main goal was that it wanted firms to adopt a more principles-based approach and create their own set of procedures. Essentially, this is the same as what they asked accountants to do back in 2015, when they changed the reporting requirements for us and they gave us more autonomy to decide what should actually be included on the accountant's report. So they're leaning you towards following the same process now, basically. So can you believe we're over a year on since these rules came in? And in all fairness, I'd say that a lot of firms haven't embraced them at all. I found from our own client base that a lot of the firms did start genuinely thinking about it and even started putting policies together, but then lockdown happened and everybody sent their staff home, and any further thought of changing something that worked for the time being was just out of the question. And to be quite honest, I can't blame them in the slightest. However, that said, the stance of carrying on with the old version will only work for so long. And also thinking I'm a small firm or I'm a sole practitioner, so it's not really relevant to me. It is, every firm needs to comply. And also what you're going to find is that now the training of the old rules is gone, any new training that comes through will be on the new rules, and all of that training is going to refer people to go and look at your firm's internal procedures manual, which if you've got newer staff members in your firm, they're going to be left feeling really unclear about what actions they should take and when they should take them. So it's therefore really important that you do start to consider the new approach. So the new rules and doing this procedures manual, although it does feel like a really timely exercise to create this manual, it incorporates everything that you need to do going forward, and longer term you will feel the benefits of it. So first and foremost, it will show that you're compliant to external parties. So if you have any SRA monitoring visits, they are very likely going to ask for a copy of your internal manual. Your accountant's going to ask for a copy of it when they're doing your solicitor's audit, because if they can't see that manual, they're not going to know if you've actually incurred any breaches in the year, because what they think might be a breach could be your policy to do it that way. And also a lot of accreditations are going to want to see it before they offer renewals. For instance, Lexel will start asking for you for this information. But also it will help your firm internally. If you've written a manual, it means staff know where they stand. So the rules are laid out, they're clear. So it means if they've made a breach, it's very easily identified and it can be determined quite simply. And also it means newer staff members can be trained more easily. It does mean as well that as your systems evolve over time, you have a written document in place that will help staff implement the changes. And this will become more obvious, especially maybe over the last year, if you'd have felt with the pandemic and everyone suddenly being sent home to work, had you have had a policy document in place, it could have made that process a bit simpler. So what's changed? Overall, the change of the rules aren't dramatic. Many of the original rules will form part of your new guidelines. However, you'll find that there's more flexibility over timings, and the definition of promptly is gone. So you've just got that ability to make your own decisions, and also things like your banking, where you had to do your banking really quickly. You might now decide as a firm, well, actually I'm based in the middle of nowhere, going to the bank daily was a pain, I'm going to do it weekly from now on. So it just gives you that ability to make some decisions for yourself. But there are a few aspects of the new rules that have caused some confusion. So what I want to focus on is how to understand these confusing bits so that you can build them into your new procedures. So rule 2. Basically, this rule, The detail of it's not overly different apart from a few minor changes, but all they've really done here is give you a much clearer definition of what client money is and makes clear reference to regulated services. So as I've already mentioned, the paying into client account promptly, the whole promptly concept's changed, and you can choose what promptly is. There's no longer differentiation between professional disbursements and others. And also, more importantly, there's no more agreed fees. So if no bill has been issued, it's client money. And then the biggest change overall to this section is that you can hold client money in the office account. Then in addition to that, there is Rule 4.3 that sort of goes with it. And Rule 4.3 suggested that disbursements had to be billed before you could take money. And that, coupled with Rule 2.1, threw people into chaos a little bit, because one talks about being incurred and one talks about stuff being paid. And overall, accountants and solicitors alike literally had no clue what the right answer was. So the SRA have now provided some guidance to clarify the situation. What I've done on the slide is put the full detail of Rule 4.3 and 2.1, but essentially they cover the billing of costs and disbursements, the subsequent transfer to the office account, and when office money becomes client money. So I'd like to just clear up those finer points just so that everybody understands where they need to go with it. So billing in advance means that you can put money to the office account. It's not a typical route, and you really need to be careful that you've ensured that your clients are fully informed of the risks involved holding it in the office account instead of clients. We know between ourselves as solicitors and accountants that client money is safest when it is held in the client account. So therefore, as accountants, what we will be doing now is looking really closely to see where you've decided to move it to office. Have you done that because you're a failing business, or you're trying to support the owner's lifestyle? Obvious signs of this would be if you've got an overdraft on your office account. If you're moving that money over, it's supporting that overdraft. So that's where we're coming at it from now on. Okay, so then the next bit on it is firms being required to send a bill in order to reimburse themselves for disbursements. And this was the massive area of confusion. So as long as a client is aware of the type of the cost, the timing, and a likely idea of the amount, that is sufficient. Usually you will have covered this in your client care letter, and it will also be probably on your website through your pricing transparency information. Where you really do need to be careful on just moving it across without a notification is if, say, for example, you engaged them and then for some reason it got delayed, like a conveyancing transaction, someone pulled out, so it got delayed by 8 months. Quite a lot of time will have passed. So you just need to make sure that your client's still comfortable, that they understand what the costings are over that time frame. And in addition, this also applies to payments made direct from the client account. So if you're paying something away from the client account for that client, you don't need to send a separate notification to them. Then we move on to the whole, does it need to be paid or incurred? So it's okay to move money from client to office on incurred disbursements but not paid, where the solicitor will remain liable. So a really good example of this is your land registry fees. So you would do the work and incur the cost, and the land registry will generally put that on account and then send you an invoice at the end of the month with all of your clients' costings. So when that happens, even if your client never ever pays you, you still need to pay that land registry monthly invoice. So therefore, that's an example of incurred but not paid is okay. The one where you really need to be careful is where the client would remain liable. And an example of this being stamp duty fees. So if you were to move this to office account and then for whatever reason that money disappears and you don't pay the stamp duty, the client would still be liable for that. So in those instances, it is better to leave it on client account until paid. And the SRA are really conscious of firms not making a cash advantage out of doing this. So you've just got to be really careful on your thought processes of when you think it's okay for it to become office money. Okay, so then we move on to rule 3, which is overly nothing exciting around rule 3, other than the fact that it does talk about the banking facility, which is a hot topic among the SRA. So if we find the banking facility has happened, it is a serious breach, and as reporting accountants, we are required to report it to the SRA. There are many occasions when firms don't actually even realise that they're acting as a banking facility. So I would recommend that you take some time to read the case studies, and I have put the link on the slides just so that you know. Rent deposits are a really, really good example of what we come across on a regular basis that firms fall foul of. It's constant. Probably every firm or solicitor I act for has a rent deposit on their balances where they probably shouldn't. So I spoke to the SRA representatives about this at a recent course that I was on, just to get their opinion on them, because it is such a hot topic. And they very clearly advised that clients should use the government support deposit scheme, for residential deposits. For commercial agreements, the solicitor isn't actually party to it, so why would they expose themselves by offering to hold the deposit? And it's a breach and it should be reported. That was very simply how they explained it. One thing that is worth noting though is if as a firm of solicitors you're involved in new build property developments, where, for example, there's a retention for road adoption, that isn't actually a breach, because the scheme itself specifically states that it must be held by a regulated professional. So just to conclude on that, where there's a deposit that isn't for a scheme and it's just agreements between landlords and tenants, so nothing to do with a solicitor, you're not providing a regulated service, and so you should not hold the money. Okay, I've just seen that a question's come through. I'll just read it out. It said, it would be great if you could please cover the rules for firms that don't have client accounts but take money on account in respect of fees only into office. I'll cover that as we're going along, and perhaps raise it at the end, because it's quite a lengthy question. So just to let you know, I've not ignored it. Okay, so then the banking facility does move quite nicely onto the old balances rule. Now, the actual rule 14.4 has completely disappeared, so that it's no longer there to say that you can write to a client every 12 months about the balance hold. So now there should be systems in place within your firm that make sure clients or third parties are regularly informed when funds are retained at the end of a matter that's substantially concluded. Being regularly informed suggests that this is more often than annually, and the reason must be in respect of you still delivering regulated services. So the new rules have kept the £500 limit in place, so you don't have to request approval for if you want to send money to charity up to the value of £500. Bear in mind that this is per client, so if you've got 10 matters for one client that add up to £510, you can't send that to charity. In addition to this, the SRA have provided some updated guidance on the 8th of October 2020 that explains the process is for balances over £500. So they've got an online form now, which is quite easily accessed. And once you've submitted that, the SRA will make an assessment to consider the amount of the money, the length of time that it's been held for, and the steps that you've taken to trace it. It also looks at costs involved to make further inquiries and the likelihood of the success of tracing that client. Much of it depends on the age of the residual balance, and the SRA will consider whether you're going to keep the money in your own office account or whether you're intending to send it to charity. But as a minimum, the SRA expect firms to have used the DWP letter forwarding service and also free online searches, and they're all for social media and any means that's free of just doing any kind of search to locate these people. The guidance does also conclude with some useful examples of you paying out-of-pocket expenses. So firms don't have a legal authority to deduct the costs that they've incurred for attempting to trace somebody. And when the SRA are granting approval, they will take into account reasonable out-of-pocket expenses, for example, the DWP search fees and any advertising costs. But it's important that you note that if the client then reappears, you are liable to pay them the full amount that they are owed. So the next section of the presentations, just to explain the whole how you go about an internal procedures manual, because I'm sure a lot of you are sitting there thinking, she's said internal procedures manual about 15 times now, and I literally have no idea where to start, what to do, what to say. So this is what I want to focus on, just to help you with that starting point. And regardless of the rules, it's really good practice for any firm to do an internal procedures manual, whether you're a solicitor's practice or not. It's your Bible for your business. And so if a staff member was to go off sick, or if they were to suddenly leave, you don't want everything to ground to a halt until you've figured out what to do with the information that you've got to deal with next. So that's why it's important to have these things written down. It's also really good for onward sales of firms. So if you're thinking about your succession planning and you want to sell to an external party, what you want in an ideal world is that the buyer will want to come in and just carry on in your shoes and not have to grill you for information for 6 months because it's all in your head. So having that internal procedures in place just only assists with all of that. So as a starting point, I'd suggest really that you need to base it on the old rules, because as I've already said, a lot of what you will write down in this manual will essentially be the old rules. You'll just put your own take on a few bits, like I might do my 14-day rule as a 7-day rule, for instance. And another good tip is to try the post-it note approach. So every time something comes into your head, just write it down on a post-it note and keep them in a pile. Once you think you've collated all of your main day-to-day procedures, stick them on the wall in some kind of order that you think you might write it up in, and then take a photo of it. And then you can sit and look at that photo and use it as a bit of a flow diagram for working your way through writing the procedures. So I will, in advance of talking about the next few bits, it is a little of death by PowerPoint because I've given too much information on the slides. But the reason for doing that is so that when you do get the slides emailed around to you, you've got good examples of what I was talking about written there for you. So it's just to help you more than anything. But what I'm going to do is just almost walk through the cycle of a client. So initially you've got client sign up. So what happens when they walk through the door? So first of all, you've got your money laundering information. So how is that collected? What do you use? Do you use the electronic systems where you pay a fee and they send you a report back to say that they're approved? Or do you do it the more traditional way of taking photocopies of driving licenses? And then the storage of that information, what do you do with it once you've received it? Who creates the engagement paperwork within the firm? Is it that the secretary starts it and the fee earner finishes it, or do you have a separate admin team that deals with that for you? It's just important to think about the who's and the what the stages are. And then once that engagement paperwork's been created, how does the client access it? And also really importantly, in terms of what I've said previously about the transparency side of things, how does the client access that at a later date? Because they might need to come back to it to check things. So it's a case of just noting down, if you use, a lot of solicitors firms have got online portals now where they upload it, you review it, and then you click OK, and that's it, approved. It might be we use a portal, they can log in and read it at any time. Or you could say, no, we're paper-based. So when they get it back to us, we scan it in and then email them a copy so that they've got an electronic version. Just make a note of that, really. Also, do you have minimum collection amounts of client money? Like for every new sign up, do you say we must have £250 fees on account? And also, who fills in the file opening forms? Do you have some sort of file opening checklist to make sure that certain things are done? Are certain tasks within that checklist assigned to certain people? So therefore, who physically actually opens the file and puts it onto your systems? So receiving client money, again, it's a case of walking through the stages of the interaction of client money from inception. So when post comes through the door, who opens the post? How do you go about it? Do you put it in piles by fee earner and then go and dump it on their desk? And if you do that, that's fine. Who does the distribution of that? And also, if you are following that method, do you keep a separate cash book of all the checks received that you just pen down so that you know when you collate them all again, you've not lost any? So and then who fills that in is the point you need to be making. Also, in terms of electronic money, how do you tell the fee earner that a bank receipt's come in? Is it that the cashier logs on every morning at 9 o'clock and makes a list of all of the transactions that have come in overnight and then emails the list around saying, own up, whose is this? Also, who's responsible for allocating the client reference and how do you do it? More traditionally, firms use the chits, the little pieces of paper where you write on one and it translates through to the next coloured, and you put one on file and you give one to the cashier. If you still do that, that's fine, just make a note of that. More and more firms are moving to electronic versions now because the solicitor systems are becoming more elaborate for home working and remote working. And a lot of our firms have switched to electronic now. So you just need to explain that electronic process and how it flows through your system. Like, does the fee earner create it and then the cashier can't do anything with it until the partner's approved it or something like that? You just need to make all of that very clear. And then in terms of if you've distributed post around the office, who then passes that back to the cashier? So is it always a secretary's job, or is it the fee earner's job to give it back? And then is it the cashier that then goes and ticks back to that cash book I mentioned earlier to make sure they've had all the checks in? And is it the cashier that does the banking? And how often do they do it? And also, do you have any cash received limits? Most of those will revolve around what your insurance will allow. So it will be the case of we can receive £500 per person in cash. If that's the case, just make a note of it. So then we move on to withdrawals from the client account. So what you need to do here again is just walk through all of the processes involved. So the obvious withdrawal from client account is transferring money from client's office to pay bills. So who's responsible within the firm for looking at that interaction? So what I'm trying to get at here is who identifies the old 14-day rule, who says there is money that I can move to pay this bill, and how often does that person do it? How is the request for a withdrawal made? As I mentioned earlier, people use the chits for the receipts. It might be that you do the same for your withdrawals or use the electronic version I've mentioned. Who authorises those? And then also you need to think about the finer points of who can log on to the bank. Is it that the cashier can log on and set up the payment, but only the partner can actually physically send that payment? And also, do you have multiple approvals in place? So you might have a limit of £10,000 that can be by one partner, and then after that, 2 people have to sign for it. And then that would probably also apply to checks as well. And then you're looking at the systems postings. So really, this is the cashier's role. So this might be the one section that you completely say, no, we'll delegate that over to the cashier's department to write up this bit. But what you need to think about is what system do you use for a start, because that's the first thing that you're going to be looking at. How is that system accessed and who can access which parts? So for instance, fee earners might have a view only access, so they can't go changing ledgers because only the cashier can change ledgers. So just make a note of that, because that's really good information for your accounting in terms of looking at what your safety measures are, because we have to look at the risk to client money from our perspective. So if you're saying you've got things in place to stop too many people touching things, that's a safeguard. Also, do you have passwords in place? And I'm not saying make a note of what the passwords are, but you should make a note of how the passwords can be retrieved if somebody suddenly can't come in one day and they are the only person that can access something. So it might be, for instance, that your IT support has all of the passwords and only the partner is allowed to go and ask for that override of give me that person's password. And then you move on to who does the systems postings and how often. Some of our firms have several cashiers, and it's that one does the receipts and one does the payments. So if that's the case, make a note of things like that. You might also have it where one does all of the day-to-day receipts and payments, but one does all of the higher level stuff like the bank reconciliation. And I've also just put in brackets on there, ensure three-way. It's amazing how many firms don't do a three-way bank rec, but they think that they are. So if you are in doubt of what a three-way bank rec is, please drop me an email and I can send you a template so that you know you're performing the right version. But essentially, you just need to make sure that it goes matter balances report to cash book, and then cash book is a reconciliation of the bank statement and unpresented items. So you've got the 3 items in there for three-way being bank statement, cash book, and matter balances report. So once the reconciliations are done and you've identified the person that deals with them, who also does the remaining month-end procedures, so for instance producing the monthly management accounts and that kind of information. And then also, where do you store it? Most people kept them in paper files, and then after COVID hit, they decided they should all be electronic. So there's a massive mix of how people are storing information now. And it might be that you've got a cloud-based version of storing something that can only be accessed by 10 people or something like that. You just need to make a note of that. And also, what do you do in the event of a major breakdown, for instance, a fire? Do you have a cloud-based system? So actually it doesn't matter because you can access it anywhere. Or is it actually yours in office on your server system, in which means you'd have to get an external backup from your IT company to be restored, and what the process is they need to go through for that. It's also really useful to put your support people's numbers on that procedures manual, so that if you do have a big breakdown, you've not got to sit thinking Wi-Fi is down, I can't Google their phone number. So just little things that help out in the long term. Control environment is a really difficult one to talk about. From an accountant's perspective, what we're trying to see through the control environment is that staff feel safe to admit that they've done things wrong. If you've got a real dictatorship in your leadership team that don't want to hear it if you've made a mistake, to us, that's a bigger risk, because it means that people will do more to hide mistakes. So the control environment just explains that information, really. So what you need to do is walk through the governance of the practice. So who forms the management team? And I'd suggest here it's a really good idea to do an organisational structure. And within that structure, I really would recommend putting the roles and responsibilities of each person. As I said further back in the presentation, it's really useful for newer staff members if it's all documented in one place, especially with remote working now. So who are the reporting lines? So it might be that you have a line manager that you report to, but actually you don't report your breaches to that line manager. So that's why the roles and responsibilities is actually really useful to document. So as I've said, who do you report the breaches to as well? And also, how are breaches recorded? So, I mean, if you use DG Legal, you perhaps use their compliance caddy software. That's fine, just make a note of that, explain how you access it, explain that certain people might have access with a password. If you use another system or a paper-based Excel system, you just need to note where it's saved, how you access it, who's allowed to update it, how often it gets reviewed, note who the coffer is and who the culp is, so that they know who those important people within the firm are. And then in addition to that, it's the client file reviews and the client complaint side of things, so the culp role more, document how all of that works so that you've got a clear understanding of the processes that the firm should be going to. This so much isn't more for the accountant side of things, but this will be very important if you have SRA monitoring visits, or also your Excel renewals and things like that, because they want to see that the firm's doing its good practice work. Okay, so the next bit is not actually specifically something about the new rules or your internal procedures manual. It's what I'm saying is just the good practice things that time and time again, when I go and visit solicitors, I always pick up on these things during the year-end work. So why not get into that good habit while you're writing your procedures manual? So the major areas of weakness when I'm looking at doing accounts and audit for solicitors is the old balances on the matter balances report. I ask for WIP, and 9 times out of 10 there's a lot of old stuff on there because they don't do regular WIP write-offs. And also the aged debtors report might have a lot of old debts that need chasing. So as a good practice procedure, while you're introducing these policies, why not print those reports off on a monthly basis by fee earner and then distribute them to each of those fee earners to look at? What you've got to remember here is that the fee earners are the closest people to the client. So if they're regularly on the phone to somebody, they should know that there's outstanding money and they should chase that money. And if they don't feel comfortable with it, it's something you need to work on with them as a firm to develop, or at least make sure that somebody else is taking that responsibility. Because the last thing you want to be doing is building up lots of WIP that you're going to bill, knowing that the last bill has still not been paid. So therefore, get into those good habits of looking at them. But this information is only as good as what you do with it. So once it's distributed, the fee earners need to annotate it. So for instance, the WIP one, they might put file needs closing and writing off. That's fine, but somebody needs to take responsibility of collecting that information back in and then doing something with it. So it might be that it becomes a cashier's role, or the practice manager might take responsibility for it, for instance, to do the WIP write-offs. But the important thing is to make sure that somebody does, because if nobody's taking responsibility for it, it is a pointless exercise. But the benefits of doing it as well revolve around things like, it is a profitable firm. If profits aren't as good as they have been in previous years, and you're suddenly doing lots of WIP write-offs, that's a good way of you identifying that there's something wrong within your business. So if you're not taking the time to do that on a regular basis, you could get into a mess without even realizing it. So this is why I'm saying it's a good practice thing to do. And then obviously with the old balances, it just gets them back to clients quicker, because if the fee earners are annotating, can go back, please return, need to get bank details, the cashier's department could be dealing with that to get it moving so that you're falling in line with the new promptly policy. Okay. So it's questions and answers time. I think we've got through all that fairly speedily without any questions. I have had 2 that came through. I'll just bring them up and start with them. So somebody's asked, a recent STD/SRA case showed that action was only taken after the firm had 7 qualified accountants reports and had been subject to 3 SRA forensic investigations. What do you think this says about the annual accountants report regime? I can't disagree, if I'm honest. I think the SRA have been working really hard to get better information from accountants. I think the thing in the past has been that originally it was we had to report everything, and that was just pointless, because who cares if you didn't transfer £500 within 14 days? It's irrelevant. The client hasn't lost money. So once we started moving towards firms being accountancy firms, being able to give a better indicator of what is truly a reportable breach, it is helping the SRA to get better information to take action against firms. But I think overall it's just a work in progress amongst accountants and the SRA alike. Next question. was the one that I read out earlier about covering the rules for firms that don't have a client account but do take money on an account. So as I said, you need to be billed. I know previously you had the agreed fees policy in place, but now you just need to make sure that if you're going to take any money from anybody, you've got to raise a bill in the first place, and it can be in advance of the work. But as previously said, you've just always got that risk where if you've not undertaken the work, it is client money but held in office, so it's at risk. I hope that answers your question, but if you do have any more on it, please do let me know. Somebody asked if we'll get a copy of the slides. Yes, they're being emailed at the end of the session. I believe Alison's sorting that out for you. Somebody else has asked, what about money the firms receive to hold in client account for wills and probate matters while the matter is still pending to be resolved? So you are, in effect, you are providing regulated services still, because your plan is to start the probate work. It's just that there's a delay in starting it. So that's okay, but you just need to keep clients well informed of exactly what money you are holding for them. So it's just the regular contact, so everybody knows where they stand. That's the important element there. And as I said, the 12-month rule's gone now, so regularly does mean more than annually. So it might be that you'd write a policy to say that you're going to every quarter look at anything that's not been touched for 3 months and make contact or get it returned. Somebody else has asked, damages paid for unlawful detention in client's current account. Client was publicly funded, legal aid. The client had no status in the country, had no bank account, had no ID, and couldn't open a bank account. I've had this question so many times, and it's a really hard one to answer. Basically, you can get bank accounts now, and I'm not overly familiar with the details of them, but you can get small bank accounts set up when you're not based in the UK. So it might be that somebody needs to look at doing those. You're not supposed to give money that's not to that client. So it's whoever gave you the money in the first place is where it's meant to go back to. And you just need to do whatever you can to get that money back to them. But also you need to consider the fact that why did you get that money in the first place if you don't have any money laundering ID for them, or if they didn't have a bank account in the first place. So maybe you need to think of it from when they walk through the door in the outset of, should you be acting for these people? Do you assist with updating the manuals to help with meeting the compliance? Not specifically as a task, we don't do that for people. However, our own client base are working on theirs at the moment, and most of them have drafted it and asked me if I'll give it a once over. So for our clients, yes, we're just doing it as part of the service and giving them some pointers as part of doing their on-site work. But no, as a rule, we don't just take on that as a service, because it would be quite time consuming and costly for you for the reward that you could probably benefit from your own accountant. There's quite a few questions coming through. David, am I okay for time?
Yeah, you're fine. The only thing I was going to, I almost interjected to say that Maria is welcome to contact me for some further advice on her scenario, because it is a little bit unusual, because it's legal.
Bank account one. It's a pain, isn't it? It's really hard.
Yeah, it's a little different, because although AML doesn't apply because it's legal aid, you still have to do due diligence. So Maria, perhaps if we take this outside of this webinar, and I'll be very happy to look at this.
I must highlight that I'm great in the rules side of the things, but the compliance stuff, I do work really closely with David in terms of the SRA applications and the forms that need to go through, and more of the money laundering side of things. That's much more David's expertise area than mine.
Yeah, and whilst we do manuals in relation to meeting compliance rules as a DG Legal, what we don't do is specialise in internal procedures, which is what Paula was alluding to when someone goes on holiday, etc. So yes, we help with the compliance stuff, but we don't necessarily write internal cashiering type manuals. So back to you, Paula.
Okay. So another person's come through asking, we're about to change legal accounts package, which one would you suggest? That's a really tough one to answer without speaking to you directly, and I am happy to have a conversation afterwards if you'd like to, but it all depends on your size of the firm, how many fee earners you've got and what you want from it, because you can go, I mean, I've seen lots of different software packages, and you can go for a really simple, really inexpensive one, which doesn't cost you much on a monthly basis, which will purely meet compliance needs. And that's might be all you need, because you might be a sole practitioner who thinks, I just need to make sure it does my bank rec every month and that's all I care about, in which case I can recommend a really perfect software for that. You might be a firm with 30 fee earners that's looking at how you get your remote working going really well and how you get your cashiers department running more smoothly, etc. And so therefore there's a good package in terms of that as well. And you could be someone who doesn't have internal cashiers and you're looking for a whole outsourced package. So that's why it's a difficult one to answer, but it is something I can look at for you, because as I said, we have seen so many of the different software available. So do drop me an email afterwards if you'd like to know more. If you raise a bill, can this be put to the office account on the same day as the bill is raised? Yes, the point is that the client needs to have seen it. So if you're emailing the bill over to them, then that's fine, because it can all happen on the same day. But it's a case of it's supposed to be delivered. That's the point, before you can take the money. So you just need to make sure that that's happened. Three-way report not available on all account systems. Can you provide your email address? Yes, my email address is on the slides that are being sent around, and Alison's also going to put my contact details, so I will send this across to you. In fact, what might be easier, I'll put the template over to Alison and she can attach it to the email that comes to you all, so that you can have a quick look at it for yourselves anyway. Can you bill agreed fixed fee and transfer the money from a client account to office account before the work is completed? Yes, that's the point now. If it's been billed, it can become office money, even if it's in advance of the work. But as we've said, that isn't necessarily the right thing to do. And you just need to think about, as a firm, whether you need to do it. Because if you've got a client account in place, I wouldn't recommend doing it until the point where you think the work's substantially done and you've got a good reason to transfer it over, because it's at risk when it's in the office account. How do we disperse to beneficiary in care homes without an account? Again, this might be one for David, to be fair, but I have spoken to somebody who had, I was on a SRA course, and somebody was talking about somebody being in prison and having the same issue where you can't actually get a bank account. And there is a way that prisons and probably care homes alike can set something up where they can receive it on behalf of the person and get it over to them. So it's worth looking into that. But it's not something I'm overly familiar with, because it doesn't come up all that often. I just know that there's a process in place to be able to deal with it.
Yeah, I think it's. I think some care homes may have trust accounts, but
yeah,
if that person would like to get in touch with me directly. Oh, I see it's Dolores. I know Dolores. Then we can take that query forward.
Okay. Which software do you suggest for a sole practitioner firm? Am I allowed to say softwares out loud, or am I going to be favouring one over the other and get told off after this webinar?
I think you probably should be a little bit careful and just have.
Yeah, that's what I'm thinking. I'm happy to talk about software with anybody, but I think it's probably best on a one-on-one basis so that I can assess your own needs. So I'm not dodging. I'm just thinking, am I going to get sued afterwards? A partner firm is threatened by a former client with a legal ombudsman action for allegedly overcharging, although he's paying regularly with regular invoices. There's manual timekeeping, but what else is helpful if the ombudsman becomes involved? So it's really just justifying the work that you've done. A really good example at the moment, immigration solicitors have become on our list of high-risk clients that we should look at. And the reason being is that a lot of immigration solicitors, apparently, I haven't come across it with my own, but apparently they keep resubmitting applications to get people into the UK, even though they know they're going to fail, just so that they can get the fees. So it's just knowing in your own mind and having clear documentation of all the work that you've done to prove why you're justified in doing that work and what the fees are for it. And your transparency pricing should be on your website, which I think David's done webinars about in the past, haven't you, David?
Yeah.
So as long as that's clearly documented on your website and been made clear to the client in the client care letters, and you've billed in line with those policies, and as I said, and you've got justification for the work that you've done, that should be what you need to give them. I don't know if you want to add anything there, David.
No, I mean, we've had a number of cases over the past few weeks in relation to the Ombudsman, and we just suggest that you work with the Ombudsman, even though it's maybe through gritted teeth, just as you would do with the SRA, i.e. being open, transparent, helpful, and reply promptly. The Ombudsman and the SRA treat law firms differently according to the level of engagement. And really they just go after the firms that don't engage, aren't particularly polite, and get very defensive, almost in a litigation type manner. So unfortunately, there is no alternative. You just got to work with the Ombudsman, even though the former client may not have any grounds.
Yeah, unfortunately, it's a sad fact that from that perspective, the SRA Ombudsman, they've got the power. So you just need to be nice and do what you need to do to get through it, basically, don't you?
I can see Dolores has answered a follow-up question. Dolores, I'd like to speak to you about this separately. Otherwise, it's going to take a little bit too long. So I will get in touch with you after the webinar.
Okay. Have any rules changed regarding client providing proof of bank details? No, there haven't been changes. Our recommendation would be that you get the bank details of the client on sign up, and they shouldn't change throughout the time you're working with them. But if they do, you need to get almost new money laundering information, if you like, of why the bank's changed. So you'll need proof of their address to go with the bank account. The good reason for getting that information up front is it helps with the return of the balance at the end of the matter, because if you've not got the bank details, sometimes that can be the falling point for getting the money back to clients, because they're not banking the checks because it's only for 10 quid or something. If you'd got those bank details from the offset, you could just send it back to them without any bother. And the rest are just thank yous. So I think that's it from the questions, unless anybody wants to add anything else.
I don't know if you've seen the one about...
I missed one.
I don't really think that's one for you though, Paula, really.
Oh, okay.
So what I would say to the person that's asking about, can the Ombudsman ask you to lower amount to charge the client? I basically delegate these type of questions to a couple of my colleagues. One was a former senior manager in the legal ombudsman, and she was also head of practice standards in the SRA. So I'd rather her answer your question, particularly if you can give a bit more detail. So if you could send an email to us, use the address consultants with an S at dglegal.co.uk. I'll make sure that one of our experts gives you a good reply.
Okay, So a final from me, thank you very much for listening today. I really do appreciate you all coming to attend. The slides are being sent round, as said, and my details are on the slide and also being included in the email coming to you. Just for any firms that are interested in what we can offer, we do a free, no obligation 1 hour meeting where we do a bit of fact finding and talk about what your needs might be and how we can help. But as a firm, we do some really important things for solicitors at the moment, which is succession planning is a massive area that a lot of firms are really struggling with. So we do look at that in a lot of detail. I help a lot of David's new startups with what structure they might need to be. And also in a few month or two, I've got a structures webinar that I'll be doing. I am actually doing one a month over the next few months with another colleague of mine, Chris Hutton, who, if you attend any, you'll meet him too, where we are covering some of the finer points of things we can offer. For example, employee ownership trusts to help with succession planning is a really good one that you might want to watch, and it will give you a good idea of all the kinds of services that we can provide. So please do listen to any others and drop us a line if you're interested in a chat. And that's it from me. So thank you, David, and thank you everybody else.
No, thank you very much indeed, Paula. That was a fascinating presentation, and we very much appreciate the time you've given over the last hour. I'm just going to close on a couple of things. We've got some really interesting webinars coming up, a whole mixture of different things. For instance, we've got immigration and crime webinars next week. We're shortly going to announce a very, very interesting webinar where we have two leading employment lawyers face off against each other, debating about whether or not employers can force staff to have the COVID-19 vaccine. That is such an interesting issue. It's so topical. A lot of people are asking the questions because you will have seen in the news, some employers are saying they're going to force their staff to have the vaccine. There's a whole number of issues in relation to human rights and rights of different people. So look out for that announcement. I think we're going to be doing that one next month. And just a couple of other things. I think number one, Paula, you're on holiday now for about a week, aren't you? Is that right?
Yes, I am. So I'm happy for anybody to drop me an email about any questions, but please don't think I'm ignoring you. I'm off for a week, so I'll be back the 6th of July. So I will promise to get back to all of you by 31st of July at the absolute latest. With answers to any questions that come through, just to give me time to trawl through all of my emails post-holiday. But I'm not ignoring you, is all I'm saying there.
Okay, thanks. Thanks very much for that. Any other queries, just get in touch with us at consultants@dglegal.co.uk. As is our common practice, after this webinar ends, we will ask you to leave a rating and hopefully leave a review. It's really motivating for us if you say a few words, if you enjoyed the webinar. If you really didn't, then get in touch with us by email, and we'll investigate your comments. But I'm sure the majority of people would have enjoyed the last hour. Timekeeping, Paula, has been absolutely amazing. It's 1:59, so absolutely bang on time. So thank you once again, everybody, and we look forward to seeing you again at a future webinar. Thank you and good afternoon.
Great, thank you all, bye.